just good to talk to large money managers about how they are thinking about their portfolios in a scenario like this. What is the rebalancing, if any, that Sunil Singhania is thinking of? Let's get him on the show to talk about that and more. Sunil, so good having you. Thank you so much for taking the time out. Really appreciate this. Good morning.
Good morning.
And Sunil, just trying to think, yesterday PM Modi came out and said that there is a coalition government happening, the two allies have confirmed, so on and so forth, and they will continue with the policies. He mentioned defense as well. For you, is it a dramatic change in the way policies will be done and conducted, and therefore would portfolios need to be rebalanced? Or is the proof still waiting and not clear as yet?
So obviously, Neeraj, life is all about expectations and reality. I would say last week, the markets would have been happy with the 300 to 325 seat NDA mandate with BJP crossing 270. I think we are just around 10% lower, both in terms of the BJP as well as the NDA seat share. However, the overnight exit polls raised expectations phenomenally, and what we saw on Monday obviously led to what we saw yesterday, which was a sharp correction. Actually, as we speak, the markets have stabilized in the morning. We are up like 1%. So from Friday's low to today, we are down like 2%. But the mood in the market is as if, we have lost like 50%. Obviously, the outcome was not what the markets would have loved. But, I think it's going to be a coalition, yes, but it's going to be a strong coalition. And if you go back in history, except since 2014, where one single party had a majority, India has, as an economy and political system, lived with a coalition government. In fact, 1999, the Vajpayee-led BJP government, BJP only had 182 seats. And the pre-poll alliance actually ended up with less than 272 seats. And it was only later on, a post-poll alliance with TDP that allowed, the government to have a majority. And that government lasted 5 years. And those were the 5 years where maximum reforms, including divestment, privatization, telecom, and so many things happened. So I think it's a lot of conjecture at this point of time. I don't know how things will pan out. Mr. Modi yesterday clearly reiterated that they will continue with the reform process. So I think let's see, I think next couple of days, let the market stabilize. The fall is going to be more in stocks which went up significantly far beyond their fair value. And I think those stocks will continue to have choppy days ahead. But by and large, choppiness built in, I think markets should stabilize.
And Sunil, sorry, hence my question. Would you feel the need to do the rebalancing of the portfolio at this stage, or will it wait maybe till the budget or otherwise?
So Neeraj, after price movements, you always feel that I should have done that.
Yeah, sure.
But the only good thing is we are very fundamental focused. So everyone feels a pain when the market falls, good, bad, ugly, everything falls. And, I will not shy in saying that our portfolios would have also taken a hit. But the good thing is that we are very fundamental focused. And therefore, any uptake, we are very sure that the portfolios will react upwards. Yes, we have been sitting last night and even today morning. There is a little bit of tweaking which we might do. But by and large, we have a very diversified portfolio. And despite what was happening on IT, we stuck with our 8-10% weightage in IT. We stuck with our 7-8% weightage in pharma. I think consumption is the only sector where we don't have significant weightage. And maybe with all this happening, both in terms of technical factors where consumption stocks might do well, as also the fact that with good monsoons and a little bit of focus more on the rural side, consumptions might pick up. Maybe that is one segment where we might have a closer look.
Sunil, hi, good morning. Tamanna here. And, I would love to have been a fly on the wall on those retweaking meetings that you've been having. But just to take forward one point on what the market's concerns were and now what they could be. So part one was, do we have an NDA third term? That seems to have cleared up. Do we have a Modi 3.0? That seems to have cleared up. Now the question is whether you would see policies tilting more towards populism or not. Is that really a big concern from your point of view?
So Tamanna, unfortunately, I am growing old and I've been in the market for 30 years. And over 30 years, irrespective of which government has been at the center, we have moved ahead as an economy. yes, if you have a very, very strong leadership, you might end up growing 0.5% faster. But that is not to say that, this time that will not happen. So as you rightly said, I think the two main important points are whether there will be an NDA government and whether there will be a Modi 3.0. I think 99.9% that seems to be clear. In politics, you never say 100% because you never know what googly comes up when, but 99.9% that seems to be a clear thing. It is not that the government is focused on development. It's the people who want development. I think you can't wish away from the fact that people want good trains, they want to fly, they want good roads, they want water, they want electricity. And I think irrespective of which government comes in, I think they will have to do what the people want. And the other interesting aspect of this election, it's not that rural has voted for one block and urban has voted for another block. It has been more regional. The 3-4 states, Maharashtra for its own political reason, Uttar Pradesh, which was a little bit of a shock, and Bengal, which always has an affinity towards Mamata and a party. Other than that, I think by and large results have been maybe better than what was expected. So all in all, it's fine. I think there is work to be done by this government. And frankly, at least I'm an optimist and I believe what happens for good. Maybe, there will be a little bit more focus on hearing the voice of the people going forward.
Right, yeah. I mean, at the end of the day, it's the democratic process that wins every time that there is a free and fair election at our scale. Just very quickly, Mr. Singhania, the kind of fervor about a certain segment of stocks, which are policy-facing stocks, railways, PSUs, defense, etc., would you cool off on them for a bit?
So luckily for now and unluckily over the last 6 months, we have had very little exposure in defense, particularly the shipyards and the PSU defense companies, because as I said, we are a little bit valuation focused and the valuations did not allow us to invest in them. And frankly, even after yesterday's sharp fall, we still are not very excited because the valuations are still significantly higher. So I don't think it's about the segment. I think all these segments have great potential, whether it's railways or defense. I think now we are used to traveling in good trains. You will be traveling in good trains, irrespective of whether, the NDA has 325 seats or 295, they will focus on that. Or whether even in future, some other government comes, they'll have to focus on that. It's all about valuation. So unless the valuations come to reasonable levels, I don't think there is going to be too much of interest in these segments. But as I said, yes, I think there will be some companies, some stocks which might give an opportunity. It was getting tough last 3-6 months to buy stocks, particularly for a little bit of valuation focused investors like us. Maybe this correction is going to give that opportunity. So, I always like to see the silver lining in any adversity. And, our investors are sitting on a lot of cash. We also have cash. Maybe this would be the time where we get an opportunity. Our 5-year view on the country remains as positive as ever. This 3.7 is going to 7 trillion. Maybe instead of 7, it might take 8 years, but the direction is very, very clear. And I'm very sure there are a lot of long-term foreign investors also who are looking at this opportunity, because everyone was waiting for some reason of markets to cool off. And maybe this might be that reason.
Right. Sunil Murli here. One question for the immediate context is, we are all focusing on how FIs are coming in, they are selling, sometimes they come back and invest. But the most important engine or the most important pillar for our markets have been domestic mutual fund investors. Do you think mutual fund investors, will get shaken by this? Do you see any redemption happening there? Because that's going to be a very important cushioning against any selling that's coming from FIIs.
So Murli, if you take Nifty, since Friday, we are down 2%. Year to date, we are up 1%. Funds, even after yesterday's massacre of between 5 to 8% of NAV, maybe some funds fell 10%. We are still 5, 6, 7, 8, 10% up year to date. So I think if you are an investor who's satisfied with, mid-teen kind of returns, even this year has been great year, So I don't see any reason why this 2-3% move is going to shake off the market. I think what might shake off the market, unfortunately, if it happens, which I don't think it's a probability, is the markets fall another 10-15% from here. But that is not what we believe in. I don't think we are looking at that kind of a scenario. I think maximum 2-3% from here, unless there is no NDA government, which again, as I said, is like a 12 sigma event, not a 6 sigma event. So I don't think that is going to happen. Maybe temporarily it might slow down a little bit. But investors are mature, investors are smart, investors have reaped the benefits of keeping on investing in every adversity. And this is going to be no different. And if you actually see last 5-6 years, this 2-3% move has happened 20 times. In fact, in COVID, we had a 30% drawdown. In Russia-Ukraine thing, we had almost a 15% drawdown. When Credit Suisse event happened early last year, we had almost a 15% drawdown. And this 3-4-5% drawdowns keep on happening, including this March, when mid and small cap fell in a month like 10-12%. So, investors are used to this volatility, and they have realized that it doesn't make sense to do anything drastic on this 2-3% fall.
Right. So your message to the retail investors would be what? Don't panic, continue to invest, add more, increase your SIP.
What I would suggest, you all should flash and show the investors that from Friday to today, we are down only 2%.
Yeah.
I think that point is being missed because of what happened on one Monday when the markets went crazily high. I think yesterday's fall, you should remove Monday and Tuesday from your charts and then see, 22,500 was the closing on Nifty as of Friday. Today we are 22,000. So what, 500 points happen at any sneeze here and there,
Yeah, that's a great point, Sunil.
But you also showcase that, I think a lot of scare is being created.
Yeah, no, so to Neeraj's credit, that's the first thing he said when markets open. But no, point taken, absolutely. It also is showing you how emotionally the market responds. Now, the question for retail investors and long-term investors is, should you get nervous when you have such kind of peaks and troughs? Or should you just, take a chill pill on those days and look at your long-term view? Because these are also opportunities, right? Today, after the kind of hit yesterday, an astute investor is looking at this market and saying, okay, I believe in the India story. I have a long-term focus. What should I do?
So, Tamanna, 2-3 things. One is God has made us emotional. So, we can't wish away with that. We will remain emotional. And markets are not only about fundamentals, they are also about sentiments and how you control your sentiments. So that is very, very obvious and very logic. The second thing is you don't expect to make returns every single day. There will always be times, I always say this, markets are like cardiogram. They are up and down, and that's why they are alive. You don't want a flight line markets. Otherwise, all of you and us will be out of business. The third thing is, there is no need to jump in immediately. I think I would suggest that please don't jump in and buy something just because the price has fallen 15-20%, because then you will get into the weaker stocks. The reason why those stocks have fallen 15-20% is there is some fundamental reason to it, apart from the news which has triggered that reason. So I would say that 1-2 days, just spend your time, watching TV, reading, trying to analyze what is happening. Nothing is going to happen in the next 3-4 days. I don't see the markets moving majorly either side unless there is shock event, So I think it's a time to just take a chill, get a little bit of, take a back seat, go through your portfolio, see where there can be mistakes which you have made and try to correct those mistakes rather than get into new mistakes.
Yeah, you're right. I think we can take a chill, and rains have reached Mumbai, so the heat wave is off. My next question, and this is slightly forward-looking, and it's to do with the fundamentals of the economy. There are multiple things which are in favor of our economy. GDP growth has been a stunning 7.8% for the fourth quarter. You had S&P coming in and raising our outlook to positive, and the RBI bonanza. So 3 factors working in our favor. But are you worried that in the new political combination that will emerge, the fiscal glide path, that's going to be key for any rating upgrade from a rating agency? Do you think that could be a concern, and therefore we should worry about that part?
We are speculating too much too soon.
Right.
One is we are presuming that there is going to be populism to the extent that our fiscal deficit will be impacted. I don't know. Maybe there will be a little bit of populism, but the good thing is that everything fundamentally and on the macroeconomic side is working perfectly for us. We have crude which has come down to $77. That gives us enough room. We have great tax collections, 18-19%. RBI has recently given one of the highest dividends to the government. So there is this 1 lakh crore additional which the government has in it. Tax compliance is increasing. I think all sorts of subsidies are reducing, and I don't think people now want everything free. They want sustainability of what they are getting. So maybe I don't know. Fiscal deficit might lead a little bit of I would say cutting in some other place to be maintained, and that also is again just a speculation. I frankly am not in that camp, but I think otherwise everything which you talked about is working well. You mentioned about monsoon. We are projected to have normal monsoon. World is stabilizing. Crude is down. GDP growth came at 8%. GST tax collection were up like 10-11%. I think what else do you want?
Well, continuity, stability, and return to sanity, I think, would be the top three. If people were making a list of what else do you want.
Every year, if you are expecting 40-50% return, then you are living in a fantasy land.
Yeah.
I think you have to have periods where markets are going to be a little bit choppy. It is fine. That's the nature of the market, and I think that is basically this period, and it also gives investors a little bit of, I would say, patience and maneuvering to buy some stocks. Otherwise, investing was becoming so difficult. It was such a momentum market. Stocks were just flying through the roof. I think there is a reality check which was needed, and there was some reason which was needed, and maybe this was the reason which is giving the markets a little bit of a reality check.
Yeah, reality check is the key word of the day. Thank you so much, Sunil Singhania. Absolute pleasure speaking with you.